Welcome to Investing for Freedom channel, and I'm Joanne. We can estimate the value of almost any asset that has serial data of cash flow by adding up the nominal cash flow of the past. Asset with long history of cash flow and has little change in the value, such as dividend aristocrats, would be easier to measure the value, as we mentioned in our last video. Then what about assets with rapid value growth? So today we'll talk about how we should value the current price of Tesla and Samsung Electronics. Conclusion first, I conclude current price is lower than their intrinsic value. But what does that mean? It doesn't mean that we should buy those stocks or the price will go up. Let's discuss this after the price valuation of the two. Tesla's value will be also consisted of values of interest, trust, desire, and intrinsic value. Value of interest is very volatile, and it often fluctuates, especially when Elon Musk says something on Twitter. That's why we need to focus on the intrinsic value of Tesla. Intrinsic value is time and money spent, and it'll include the time asset of Elon Musk, employees, and investors of Tesla. As mentioned in our time asset expansion video, Tesla's time asset in broader term comprises all of these. Then we can value the broader time asset of Tesla with the generated cash flow. Using our metaphor of dam and the water storage behind the dam, time and money of Musk and other investors, and time asset of employees are the water inflow that is increasing the water levels. But this water inflow is very difficult to quantify. So our other option is the top line of Tesla, the sales revenue, which best represents the water outflow in my view. Because Tesla is continuing its innovative growth, operating income or free cash flow would fluctuate widely. Once we have selected the representative water outflow, which in this case is the sales revenue, we can add up the annual sales starting from 2009 to get the accrued nominal cash flow and make the value trend line in the Excel spreadsheet. Because the R-square is close to 1, I assume this trend line represents the actual data quite well. By analyzing the relationship between the historical price and the value trend, we can figure whether the current price is overpriced or underpriced compared to its intrinsic value. Tesla has relatively short history, only about 19 years, but as the history gets longer, it'll help us to assess the intrinsic value more accurately. Now let's go over to Samsung Electronics. According to our principles of measuring intrinsic value, Samsung Electronics is in dynamic state, just like Tesla, but only with longer history in business. To assess the volume of water behind the dam of Samsung Electronics, which water flow should we use? In my view, same as Tesla, the sales revenue. Samsung Electronics pays quarterly dividends, so dividend is one of the water outflow. But the reason that I choose sales revenue over dividend is that Samsung Electronics adopted the quarterly dividend payout policy in recent years. So if Samsung pays out the dividend for longer term in a foreseeable manner, then we may also consider dividend as a representative water outflow. But for now, I've added sales revenue since to 1993 and extended the trend line. Because the R-square is close to 1, I assume the trend line represents the actual data quite well. Analyzing the relationship between the market cap of Samsung with the value trend, it is also highly correlated. Although we don't know the exact value of Samsung Electronics, we can estimate the trend of value, and we can also assume where the price should be accordingly. There are so many ways to assess the value of Tesla and Samsung Electronics. I have used revenue as key water outflow to assess the intrinsic value, but someone may have different view, and he may want to include value of desire given that many customers are lining up to buy Tesla, for example. Quantifying the value of desire is another issue. That's why people have different set of values towards the same asset. According to my valuation, Tesla and Samsung Electronics seem underpriced compared to their value. Does this mean we need to buy the stocks now? No. Good investment process starts by valuing the asset and buying at a low price. Low price does not mean lower price than the intrinsic value. Low price means the price that can make higher investment return than my target investment yield. Target investment yield is the benchmark rate that I need to accomplish to achieve my investment goals. You can visit my homepage, spacebomb.com, to easily calculate your target investment yield. For example, a 40-year-old Mr. A has 300 million Korean won in savings, and he can make additional 20 million Korean won every year and he is targeting 5 million Korean won for monthly cash flow in 10 years. What kind of investment should he be doing for the next 10 years to achieve his target? Your target investment yield will be the benchmark. For Mr. A's case, his target investment yield is 10.4%, which means he needs to accomplish at least 10.4% annually for the next 10 years to accomplish his investment target. Everybody has their own target investment yield. Although Tesla or Samsung Electronics look underpriced, whether we should actually invest in these stocks is a different issue. We need to confirm whether the price is low enough to achieve my target investment return. For example, if there is a real estate building for sale, Mr. A's target investment return is 10% and he expects he can make 15% return by doing his business in the building. Then, in that case, he's buying at a low price. But if his friend is considering buying the real estate building at the same price and rent it out to receive 5% return, while his target of return is also 10%, then he's not buying at a low price. So the price of the asset remains the same, but it's low price for Mr. A, but it is not for his friend. Low price is the price they can make higher investment return than my target investment yield. We need to confirm this by ourselves before we make investment decision. Cash flow diagram can be a very useful tool in this, and we'll talk about this in the next video. Thank you.